Hello everyone, welcome back to my channel. I'm Japan Life Hacks. In this video, you will learn about equity. In bookkeeping, we learned about 5 elements. This diagram illustrates several accounts that have appeared in our previous lessons. Did we have any account name related to equity? Actually, it's an uncharted territory we haven't covered yet. In this video, we'll delve into equity. Understanding equity can be challenging as it's an abstract concept. However, the journal entries themselves are straightforward, so it's an easier field once you've memorized the basics. Equity is included in the accounts of the balance sheet. Since assets are represented as the sum of liabilities and equity, equity can be expressed as assets minus liabilities. In the study of equity in the Nissho Bookkeeping 3rd grade, there are mainly 3 account name: share capital, retained earnings brought forward and retained earnings. Sure, let's first grasp some basic knowledge about Company Limited before delving into learning about equity. The first content. What is Company Limited? Company Limited is a company that issues securities called stocks, gathering funds from many individuals for its operation. Those who invest money are called shareholders or investors. Shareholders are the owners of the Company Limited. While shareholders are the owners of the company, they do not manage it. The company's management is handled by directors who are experts in business operations. The company's management policies, profit allocation, and dividends to shareholders are determined in a meeting called the Shareholders' General Meeting. Let's now look at the journal entries related to share capital. The second content. Share capital. When managing a company limited, the money received by the company from investors through the issuance of stocks is termed as share capital. In the establishment of Company Limited, 1,000 shares were issued at 100 yen per share, and payments were received from investors, subsequently deposited into the checking accounts. The journal entry is debit, checking accounts 100,000. Credit, share capital 100,000. When equity account increase, we will credit them in the journal entry. Since a deposit has been made into the checking accounts, we will debit the checking accounts in the journal entry. Issuing new shares after the company's establishment to raise additional funds is called capital increase. Company A further issued 2,000 shares at 200 yen per share, receiving payments from investors and depositing them into the checking accounts. The journal entry is debit, checking accounts 400,000. Credit, share capital 400,000. Even in the case of a capital increase, the equity account remains as share capital. The third content. Retained earnings brought forward. In profit and loss statements, the difference between the total revenue and the total expenses is calculated to determine net income for the period, which is then transferred to an equity account called retained earnings brought forward. This transfer occurs annually. Therefore, in a broad sense, retained earnings brought forward can be understood as the accumulated sum of profits the company has earned over time. The fourth content. Retained earnings. A corporation may distribute the profits it has generated to shareholders as dividends. The decision-making process for allocating profits is referred to as appropriation and distribution of surplus. During a shareholder meeting, when the appropriation and distribution of surplus is decided, there might be a transfer from retained earnings brought forward to retained earnings. Let's examine the journal entry. If a shareholder meeting approves the distribution and allocation of retained earnings brought forward of 10,000 yen as follows. Shareholder dividends, 5,000 yen, retained earnings, 2,000 yen. The journal entry is, debit, retained earnings brought forward 7,000. Credit, dividends payable 5,000, retained earnings 2,000. Shareholder dividends are decided for distribution but not yet paid out, thus, they are recorded under liabilities as dividends payable. Thank you for watching the video. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. The higher the number of likes, the better the next video will be. Your comments are the driving force behind the creation of my next video, so please feel free to leave them. Thank you very much in advance. See you next time.